Hello traders, welcome to your economic calendar update for Monday the 9th of February. It's the start of another week, and we had quite an exciting finish to the week last week with non-farm payrolls. Surprisingly quite good all round, so that put the US dollar back into favour, and we've seen some price action for the other currencies to come off their highs. So the euro had a pullback, so did the Great British Pound, the Australian dollar, the New Zealand, and also the CAD. So let's have a look at a quick summary of what we've got on today. And we've had on the weekend some China data which came out weak, with imports and exports quite weak. So we've seen a gap lower for the Australian dollar versus the US as a result, and I expect that gap to close throughout the day before normal trading resumes. We've just had the Glenn Stevens RBA governor's speech, and he didn't really mention a great deal about the policy released from the RBA last week. So the markets didn't react greatly on the back of that. And we had our ANZ job advertised was actually weaker as expected, as the economy for jobs and job growth, wage growth are all quite negative at the moment. So today the economic calendar is quite bare. As you can see, we have no tier 1 data, anything major besides the Glenn Stevens speech, which was a big letdown earlier this morning. And now we move on to looking at German imports, exports, trade balance. And that may assist moving the euro should it come in weak, as Germany is the stronger of the economies in Europe. And if we start to see signs of weakness there, we can definitely expect to see the euro come under a little bit more pressure. We have housing starts for Canada, and that's expected to be a little strong, as expected, because the Canadian economy is actually seeing quite solid growth in their housing market, and they actually had fears of a bubble there. Similar situation to Australia and New Zealand. Interest rates are low due to other factors, the commodities coming off, and that's causing people to get into more debt, buying up property, sending property prices higher and to unsustainable levels. So we do expect that to be a solid figure. Other than that, there's not a lot of other data today. So let me just do a quick recap of what moved the markets last week. We had the RBA drop the interest rate to a record low of 2.25%. US factory orders were down by 3.4%. US oil inventories also increased to an 80-year high, which was quite interesting. And the Chinese PMI came out at 49.8, which is below the 50 watermark, meaning that it's in contraction, and it's not good for the Chinese or the Australian economies. And we had US non-farm payrolls come out at 257,000 jobs added, which was quite solid and really put a boost under the US dollar. And gold dropped $29 just on Friday as everybody moved out of gold as it's a safe haven, and they jumped out of that and moved into some riskier assets. So that's what we had last week. Coming up this week, we had the job ads for Australia came out, and the Glenn Stevens speech. Both of those were really not events. We got the Australian consumer and business confidence coming out, and the Australian unemployment data. And the unemployment data will definitely move the Australian dollar this week. We just need to have a look in a little bit more detail later in the week on what the expectations are and where the price action currently sits. The US retail sales will have a large impact on the US dollar. The Eurozone GDP figures and the Eurozone balance of trade figures will come out, and if they both come out weak, we'll definitely see some selling on the euro. And we've got some Chinese inflation and PPI data coming out, which, if also weak, will also add further pressure to the Australian dollar. So that's what we've got coming out. There's nothing major. Last week was a very active week with some high tier data. This week we've only got what have we got there? 9 major data points to focus on. So the currencies will be trading a lot along the lines of technicals. And I have been writing a fundamental course, as many people have a weak part of their trading would be the fundamental aspect. So I've been writing a economic Forex economic crash course, and I hope to release that in a couple of months' time. But in the meantime, I have just produced a Forex fundamental snapshot of the market where it is right now. So hopefully keep an eye out for that, and that may give you a good indication of where the economies are at, and actually put some meaning behind the price action. Well, that's it for today. Keep an eye on for my technical video coming out later today. I'll be sending that out straight after this one, and hopefully you trade well. Until tomorrow.